evening and welcome. You're watching ET Now. The show is Startup Central, the first and only daily show in India dedicated to startups and entrepreneurship. I'm Ruchi Bhatia and we've got a power pack show lined up for you over the next 20 minutes. So let's get started with, of course, the big boy that is OYO, that is betting big on Amsterdam's based leisure group of hotel. OYO is buying at leisure from Axel Springer, the media and technology company, for almost about $415 million. Remember, this acquisition marks an important step in OYO's journey, as this is one of the biggest acquisitions that have been done by an Indian startup in the global arena. Let me get on board my colleague from Bangalore, Rahul Dayama, is joining in with more details. Rahul, the size and scale of this deal is, of course, staggering. And this, I'm sure, is coming in after Aditya Ghosh has come in OYO. Help us understand what is really the rationale behind this big buy.
Ruchi, you're right. It is really the biggest acquisition by an Indian startup overseas. So it is, considering that OYO did plan to do this, because remember, they have entered several markets like the US, UK, parts of UK really, Japan, Philippines, closer here, UAE, all on their own. But Europe seems to be a market that they want to leave their mark on, because this acquisition would give them a lot of headspace to grow and grow how. Because if you're talking about Leisure Group, it is one of the biggest players in the European market. They manage not only hotels. Remember, OYO has also seen a shift as far as business model. They are a hotel chain. They have a pure play model across segments. So even Leisure Group has holiday homes, parks, apartments. They have 30,000 holiday homes itself in 13 countries really. So this will really give OYO a deeper penetration to the market, and also the message they're sending out is that they are betting on international market and they want to do it by all means that they can, and they will not really shy out of big purchases of this kind to ensure that the next big market, next big focus will really be the international expansion plans.
Right, Rahul, thanks for joining in. Let me take this story forward with Naganan Doraswamy, who's joining us on the phone line. Naganan, thanks for speaking to us at ET Now. Let me first get the VC view in here. What do you make of this big splurge by OYO for this acquisition? They seem to be quite aggressive on the global expansion front.
See, I think if you look at what Ritesh is talking about in terms of the plans for OYO, he has set aside saying it will be one of the largest hotel properties in the world by another 4 or 5 years, right? And if you want to do that, then obviously it's very hard for one to grow organically, and you have to hence look at inorganic growth, and that means acquisitions in terms of acquisitions. And in the market that OYO is in, which is hotels, it's very, very hard to have organic growth because it will take a long time to penetrate in each geography. I think that's the path they are taking, and they are also anyway have a lot of cash in the bank, and they are putting that cash to good use to increase the speed of their expansion.
Right, but OYO also seems to be, giving the message that they are in the business to be a dominant player. They publicly claim to be the world's 6th largest hotel chain. How are you looking at that? And of course, the acquisition that has come in light of where the company intends on going.
So in terms of numbers, I don't have enough data to validate whether they're the 6th or 5th or whatever number. But, I presume that if they're claiming that, they have enough data for them to justify that. But I think if you look at the kind of investors they have in terms of SoftBank and other players who have come into OYO, obviously their goal is not just India or not one geography in the world, but, SoftBank, when they come in, they would want to rule the world. And I think that is where the company is headed towards. And that also, I presumably aligns with the CEO and the founder's plan of building a global company. So that's the whole vision they have, and that's the direction they are headed in. I think it's great. From India perspective, it will be awesome to see a couple of really large global companies coming out of India. So I'm happy personally as an Indian to see that they're getting this kind of traction and they're trying to expand globally to get a global footprint.
Right. Naganan, stay on the line with us. Also joining me on the phone line for this story is Ravi Gururaj. Ravi, thanks for taking your time out and speaking to us at ET Now. Your own take on this massive $415 million deal by OYO. It, of course, gives them a deeper access to European markets, apart from sending a message to other contemporaries as well.
Absolutely. I think it's a fantastic, move for OYO and, a real vindication in some sense that, you can build global companies out of India as well. I think OYO is trailblazing in that sense, right? They've not just done this now, but earlier they did China and they've done Japan and, other parts of the world as well, right? So I think, probably now the forerunner, right? Front runner in kind of going global from out of India, right? For all startups. I think that's fantastic, very inspirational. I think Ritesh himself, a lot of folks had doubts earlier and everything, but this is, I guess, SoftBank's horse to ride in the hospitality space, right? Globally, not just in India, right? And I think that's what makes it very exciting. Congrats to the OYO team, congrats to Ritesh, and, I think they just go from strength to strength.
Absolutely. In fact, you're right, because the investments that are coming in is, of course, because the investors are there with deep pockets like SoftBank, China Lodging, Airbnb recently. I mean, the message really is either you go big or you go home. How are you looking at what's happening in OYO with respect to how, OYO has to deal with its other competitors as well? And of course, the change in the strategy of going international vis-a-vis now the fact that, and this is of course started happening only after Aditya Ghosh has joined OYO. So how are you looking at all these different pieces coming together and giving this massive push for the brand OYO?
Yeah, I think it's fantastic. I think, if you look at hospitality, it's generally at least a two-dimensional, if not a three-dimensional matrix, right, of opportunities. It's geographic expansion. It's, the kind of formats you serve, the kind of market segments you serve, right? I think OYO is trying to push in all those dimensions, right? They're all the way from co-working to different kinds of formats, PG-type formats, and all the way up to even, more Lux kind of format, possibly in the future, right? And across geographies, they're pushing in all directions, right? And I suspect there are other things, adjacencies, that they haven't yet unveiled that will come up in the coming months, right? I think SoftBank's ambition has probably no limits, and with good capital and ambitious entrepreneur, I think you can have kind of limitless amounts of opportunity,
Right. Naganan, if you can come in on that, we have seen how other big players like Ola, Byju, Zomato, they're all going international. Is that something that the Indian startups will go ahead and do in the years to come?
So, to Ravi's point also, the kind of capital they are raising, to get the kind of valuations they would need, obviously it will be great for them to expand internationally. Not to say that the Indian market is not big. In all the areas that these guys are playing, Indian market is big enough, like we saw with Flipkart. But if you want to build a much larger company beyond $16 billion, $20 billion, if you want to build a $50, $100 billion valuation company, then obviously you really have to go international. And I think now that we have a good case in India in terms of Flipkart, I think the next step for the entrepreneurs is to get one up on in terms of valuation, in terms of the growth of the company, in terms of how you look at the markets, and then really go international. I think some of these companies are now, and the founders have now seen what can be done in India. And now I think they are now reaching for the next step in the ladder, which expand internationally. So I think it's like Ravi also said, it is great for the ecosystem. It is great for India to build this global company sitting out here. And it is possible to build with the kind of money they have, with the kind of capital they have raised, because initially it was very hard in India to raise the kind of capital that we are raising now. And now that we have the ability to raise it, we should go have a bolder vision and expand and then grab the international market and not just be satisfied with what we can do in India, in the consumer space. Because in the business innovation space, in the enterprise space, we are already building startups globally for global market. And I think we should, it will be great to see that happening in the consumer market as well. It would be great to see that happening in the consumer market as well.
All right, on that note, Naganand as well as Ravi Gururaj, many thanks for taking your time out and speaking to us. That, of course, is OYO's big bet. They have bought Amsterdam-based leisure group of hotels. All right, let's quickly then move on. The Federal Trade Commission is negotiating a settlement with Facebook that would create new positions at the company focused on strengthening its privacy practices. Facebook has agreed to create a privacy committee to protect its user data, as well as external assessors who would be appointed by the company and FTC. Joining us now on the phone line is Ayush Rathi, the Policy Officer for Center for Internet Society. Ayush, thanks for taking your time out and speaking to us at ET Now. Finally, we have seen how Facebook is trying to address a stronger framework within the organization. Data privacy has been a hot topic for some time now and even earned them bad press. However, do you believe this is coming in too little, too late?
Well, we need to take a few steps back. This is not the first foray that Facebook has had with the FTC. There was a prior decree in 2011 that called the consent decree that Facebook had entered into with the FTC that was that brought in some changes to how Facebook sought consent, and this newer investigation was brought forth in light of Cambridge Analytica that came up last year. So, in terms of too little, too late, maybe so, but it still is a start in terms of the new positions that have been created. Over the last few months, there have been several members of civil society organizations based out of the US, such as EFF, who have been critics of Facebook but have joined in positions, have joined Facebook in positions that will be sort of looking at safeguarding users' privacy by the organization. And this also needs to be seen in the larger picture of what what was unveiled at this year's F8 conference, which is Facebook's annual sort of developer meet, and the kind of sort of privacy tweaks that they seek to bring into within their existing product.
You know, but how are you looking at these developments for the end user like you and I? How much are we going to trust a privacy committee if Facebook does not make the entire discourse an open one?
No, absolutely. So, and this is where we are at now in terms of seeing how the next few months sort of unfold. Because there is a sort of inherent contradiction in how Facebook is seeking to make interactions more private on its platform, but at the same time, a large chunk of its huge revenue, about like $56 billion a year, comes from sort of targeted advertisements. Facebook, at the end of the day, is an advertisement company, and how it will then seek to tap into these vast swaths of user data that it seeks to make private now, utilizing something that we see on WhatsApp too, which is end-to-end encryption, which will make the text of this data invisible even to Facebook. And how it sort of seeks to resolve these contradictions is what we will only be able to tell with time.
But Ayush, help us understand, how is this really going to play out for international markets, considering Facebook has become one of the dominant players in the markets that it operates in? So,
and this is really where the FTC comes in. It's unique in that it is one of the few organizations and the only federal organization in the US that has both a consumer protection as well as a competition regulation jurisdiction. And increasingly there have been moves in parts of Europe also where sort of privacy violations are being seen in light of like antitrust law and sort of broader competition frameworks. So, and it's telling in that, so Facebook in its latest earning call kept aside about $5 billion as a part of its FTC settlement fee, which is still a tiny drop in the ocean for Facebook, but represents like a significant sum of money in terms of FTC fines. The previous record fee that the FTC had levied was about $22.5 million. So what this means for the big tech, so to speak, is a pertinent question to ask. And this is, and we need to look at the broader sort of political economy in which this is happening, where under the Trump sort of administration, there have been sort of there's been a bit of leeway shown to companies operating in other sectors, but not so much in the tech space. The idea being that big tech wields a lot of power. So this could set the ball rolling for other regulatory action across more disparate jurisdictions globally.
All right, Ayush, on that note, many thanks for taking your time out and speaking to us at ET Now. That, of course, was the word that was coming in from Ayush, the fact that Facebook is now trying to create a privacy committee to ensure that users' data is protected, especially for end users like you and I. All right, moving on, trucking platform Blackpark has raised about $150 million and is now almost close to a unicorn status. The supply chain startup Blackpark has raised $150 million in the Series D funding that was led by Goldman Sachs Investment Partners and Axel US, with participation from B Capital and Sequoia Capital as well. Joining us now is the founder of the company, Rajesh Yabaji, who's joining us. Rajesh, congrats on that big fundraise, biggest that you've done till date. Talk to us about the focus areas, the strategy with this big investment coming through.
You know, Blackpark is in like a point in time of the entire journey where I think it feels like I think the game has sort of just begun for us, because we are like barely scratching the surface in this large industry. And I think there's still like a lot of unsolved problems. There are still a lot of questions which I think we need to answer. So for us, the way I think after this round of financing, I think the major directions in which we would be going is national market expansion. So we have already launched our services across all the 400 industrial hubs and corridors in the country. I think we want to deepen our market share in all these areas. And I think more and more as we scale, the game is becoming quite oriented into the entire product and data sciences area, and that's where I think we'll be massively investing to ensure that I think we continue to be the leaders and dominate the market.
Right, trucking, of course, is an interesting space to be in, but what's your typical customer profile like? You cover most of the sectors and have done clients ranging from SMEs to large corporates.
So today, if you look at Blackpark, right? So I mean, we are a company which is adding immense value to the country's logistics, and the couple of simple things which we are doing is that by the virtue of the market structure, trucks in the country do not really make the number of kilometers they should make. So just simplifying the work which we do, we help a trucker make more kilometers, make more earnings, and which thereby reduces the cost of transportation for the country, right? So now in that goal, right, with an objective in that direction, we serve anyone and everyone who needs a truck from a particular point to a particular point. Most of our users are business users because we are only in the full truckload segment. So The kind of customers we serve are large corporate houses. You name any company, right, from Unilever, Coca-Cola, Tata Steel, Jindals, right? Be it any space, most of them work with us. And on the small and medium scale enterprises, ranging from a rice trader to a wheat trader, a small manufacturing company, all of them use us. There's only difference is that how they engage with us. A small SME would come on the app and on a click, book a truck. The corporate customers would integrate their ERPs with our systems and do all the transactions in an automated way, right? So everyone and anyone whosoever needs a truck, we provide them with that service.
What's been the most challenging part about building this business, considering you have to be present in smaller towns more than anything else?
Yeah, so I think we are in a market where the business is more of the tier 3, tier 4 towns, the names of these villages which you and I would have never heard, right? So that's the sort of the true nature of our business. And I think this is the part of the entire Indian segment, or be it the global segment, is like underpenetrated from a technology angle. Be it the people who are involved over here, the adoption to technologies, the market segments in terms of businesses, the adoption of technology. I think those angles have been the most challenging. And we as a business have also heavily invested in that direction more, be it our technology, the way we design it, the kind of people who work with us, the kind of passion with which they design products for drivers and fleet owners, right? I think all of this is what is helping us go stronger against that problem. So just to summarize, what I was intending to say was that technology adoption in a segment which is more a tier 3 kind of a phenomena, where the demographics in terms of education levels are the lowest, is the biggest hurdle for us in terms of expanding really fast and bringing more and more people to use our service.
Absolutely. That's quite interesting that you're saying that the employees of your company will be richer than what they are on the ESOP plans. How many employees stand to gain, considering 25% of the total vested stocks can now be liquidated?
So I think the entire fundamental construct of creating a ESOP scheme and the company continuing to invest in the direction of the ESOP scheme is the philosophy that I think typically, if you look at compensation structures, right, people really end up making decent money from their cash compensation structures. But I think the ability to make like multiples of that, and something which with the true hard work and the passion with which they're building this story, I think the true results would be more from the equity ownership which these guys have in the company while building it along with us. So we created this scheme 4 years back when we were founding Blackpark, and at that point in time, this ESOP scheme had shares worth 15,000 rupees, because at that point in time, each share was about 1 rupee, and that's the construct with which it all started. Today, that 15,000 rupees actually stands at close to about $43 to $45 million, which is about 300 crores. And which is basically the wealth which is with the people of the company. And given that in private markets, most of this is like paper money, and it's very difficult to sort of liquidate it in open markets. Whenever we fundraise, we create these events so that the stock holding which people have it vested, they can convert that into free cash and essentially reap the benefits of being part of this massive journey, Blackpark. That's like the philosophy behind this.
Right. Reports are also suggesting that you too got close to the unicorn status but nearly missed it. Will you be one by the end of this year? How are you looking at that?
I think, being a unicorn, not being a unicorn is more defined more as a number, right? I think for me, I think the feeling is sort of, very, very, in a very different dimension. Like, so today as we speak, which is something which I tell people is that, you hear us about with the scale of trucks, with the scale of cities we are in present. But I think the true story is that I think we are still scratching the surface. We are still very early. We are in a mammoth market where we are hardly like 1% of the market share. So I think that's what is more, important for me to sort of focus on. I think rest everything would follow.
All right, Rajesh, on that note, many thanks for taking your time out and speaking to us at ET Now. And of course, congratulations to you for raising that massive amount of money for your company. All right, with that, we're completely out of time on this edition of Startup Central. Many thanks for watching.